Good day, traders. Hope you guys are good and welcome to my learning space. So, as you've seen by the title, today we're going to be back testing Nasdaq. So, I just want to test out my strategy on it, try out some couple of ideas, and by the end of the series, because I think I'm going to do a 3-part series on me back testing Nasdaq, at the end of it, I think we'll have a better understanding of how to trade it, and I just want to tag you along with me and show you how I apply some of the principles that I teach on this platform. So, without wasting any time, hope you enjoy learning to trade with me, and let's get to it.
Let's start. We have this trend, right, from here to here. So this is our range. From this range over here, we can also determine that we have a demand zone over here, and then we have a supply zone right there. First thing I want to determine on my main time frame is the supply and demand curve. If we're looking at the supply and demand curve, we are in the buyer's territory, right? Meaning, the further we go down, the more cheaper Nasdaq will become, and we can buy at a much more favorable rate, right? So now, because we've determined our supply and demand curve, we are looking for incentive. How will we identify incentive? By number one, identifying fair value gaps in the market. Number two, identifying areas of liquidity. So my first area of liquidity is this one right here. And then we have a small fair value gap here. So according to my prediction, the market can take out this liquidity. And then the source of this liquidity is this demand zone over here. So market makers can get a bargain on Nasdaq by buying from the zone here, either this one here or the yellow one, right? Also consider the fact that we're in a downtrend, right? And we have this weak impulse over here. So another thing that I'd like to see, clear correction. Now, if you go to the 4-hour, you'll see that the trend is much more clear. You can see it more clearly. So let me remove this. And we have an impulse, correction, impulse. Now the market is correcting, right? All right, we have this high over here and then this low over here. So now the sensible thing here would be for me to wait for a break below structure in order for me to sell. But like I said, we're in a bias territory, so sells are not high probability. What I'm waiting for is for the market to push higher. And if we can take out this liquidity before the drop, that will be a much more favorable trading scenario. So now let's look and see what the market has to do. So exactly that. It went up, took out liquidity from this high over here, went into this zone, and then dropped, took out this liquidity. So this liquidity has been taken right here. Wasn't able to capitalize on the trade, but it's fine. And let's see what happens next. All right, so the market took liquidity here. So this is our area of liquidity over here because it's a low. Going back to the daily, we have a zone over here. So I think this will be my first trade. We have a zone over here. Although the zone is not a strong zone. Why is it not a strong zone? There is no imbalance. We had the strong push and immediately the market went back to fill in this gap over here. The only thing that makes it appealing is the fact that there is liquidity in the form of these equal highs over here. And so if the market was to drop, this would be my take profit. But because there is no imbalance, the market is much more inclined to reach higher. And also, it can also take out this liquidity over here. take out these fair value gaps, and then drop. So the market has incentive to drop higher. The only reason why I'm still in a sell is because we're in a downtrend. So the market hasn't broken through any opposing structure, right? Going back to the 4-hour, we have this liquidity right here being taken. And so we can go to the 1-hour to get an entry. So on the 1-hour, we have a zone over here, which the market has taken out. So I can place my sell here, and then my take profit at a area of liquidity on the 4-hour. So my first area of liquidity is this low here. My second area of liquidity is this one over here. As we move further up into this daily zone, there are no fair value gaps. So the market does not have incentive to reach for so-called areas of deposit. What's that word? Of discount. There are no discounted zones, right? So let's see. The market drops. We have a correction. All right. Almost hits our take profit, takes out this liquidity, right? Instead of this one. So I don't know what to make of this, but this is my first loser. All right, it's fine. Like I said, though, there is no imbalance, right? The market has incentive to take out this right here. So looking at this, right, we have a trend line break over here. So this could be a potential impulse. Like I said in the beginning, we were in a buyer's territory. So obviously the incentive was for the market to start buying, right? That was the intention. That was the incentive. Now we have this failure swing over here because we have a low. The market failed to break below this low. We have a break of the high here. All right. So now on the 4-hour, what are we looking for? I'm looking for a break of structure and a consolidation away from zone. All right. So, all right. If it's like this, I'm expecting the market to take out this liquidity, filling this gap, and then here go the, and then we have the zone over here, which is confirmed. And why is it confirmed? Because it broke through an opposing zone, which is this one. Let's go back to the 4-hour. By looking at this, the market has incentive to take out this liquidity over here, right? The first place trade is this one over here, right? But it's not a high probability zone. Why? It's not nested within a higher time frame structure. And then the second one, it should be nested within a higher time frame zone. So you have a source of an imbalance, which is this one over here, right? The market has incentive to go to a discounted zone. If we look right here, the market can potentially break through the zone. So if I was risking in terms of lot sizes, here I would be risking much less than here, because here the zone here is much more defined. It has a gap. It has fewer candlesticks on the base, right? So it's the one that makes much more sense. This one right here makes much more sense, right? So also you can see that by going on to our lower time frame, we were able to filter out dead end for a higher risk to reward, right? So yeah. So let's see how this plays out. Okay. So we missed the trade. It's fine. we can look for the same thing here, right? In a sense, I'm waiting for the market to break through this zone. If it can break through that zone, then we can expect one candlestick to consolidate away, come back for a retest, and then AOD. Mind you, this zone right here is also still valid. The market took liquidity from this thing, and then we had a fair value gap over here, right? Approach area, we have this right here. Approach area, go to the 4 hour, and then identify a zone you can trade from, right? Which is the zone over here, right? And then we have the zone over here. But the problem with the zone over here, it's located near liquidity. So like I said, I always say the market has incentive to take that out. So first, we will take our profit, more liquidity, so that we're not greedy. And then same thing here. All right, sorry. So this trade over here, sorry, this one, this position right here has been triggered. So will it get our take profit? Yeah. So 2 trades have been taken. One, it break even, will stop loss, and then this one hit take profit. So this is our first profitable trade. So going back to the supply and demand curve, we can see that the further up we go, the more we land into the seller's territory. So according to the rules saga, I have no incentive to be looking for buys, even though there's a buy opportunity, unless the market breaks through this high. So for now, mandate the sell, but we have to go further up, right? So the zone has been triggered. On the lower time frame, when a zone has been triggered, for confirmation, what do I look for? I look for a change in sentiment. And then also I'm looking for nested zones. So we have a small fair value gap here and a zone over here. But this zone is a low probability zone. Why? Because there are too many candlesticks there. And then we have this zone over here. The problem with the zone, it's located near liquidity. So for confirmation, what we need to wait for a break of structure. And if we do get that, we have multiple areas of liquidity. Namely this one over here, we have another one here. So we have a fair value gap right here, and then another zone gig. And then we have liquidity, and then a fair value gap here. So are we going to get that break or that change of sentiment? All right. So as you can see, the market took out that liquidity and now it's starting to drop. We have this manipulation over here, a confirmed, like a proper change in sentiment. Going on to the higher time frame, the market is playing on the zone, because usually on the zone, quick in out. Immediately when you see that price or the market is playing around the level, brace yourself for a breakout, because it was supposed to be a quick in and out. Look at the zone, it was a quick in and out. But also you can say, well, this is an induction going into a zone. So that's why it's good to be conservative in waiting for a break below structure. So if we can purely violate this and form a new low, then I rush up. But the market has incentive to break through. All right. So the market has violated this one. Same laws apply. So what are we seeing? You break it. Exactly what I said. But when you see that price is playing too much around the zone, brace yourself for breakout. So now I'm assuming this is when it was printing record highs. Okay, fine. Also, I think I should add selling opportunities, especially if they are long-term and indices, are low probability because this thing in the long run has to go up. What I want to see is a fair value gap. It's a fair value gap. If I can see a fair value gap, we have a starting point. But without that fair value gap, there is no solid trade. Have a new high, a new low, a new high being violated, going down. I'm assuming took liquidity. I don't think trading from a daily will work. That's just me. I don't think starting Nasdaq on the daily will work. In the next session, I'm going to try starting from the 4 hour. I don't think trading from the daily will work. We have a mini fair value gap over here, and then areas of liquidity. So we have a zone here, right? It violated previous structures, so it's confirmed. What I need is one candlestick consolidating away from the zone, and then a retest. That does not happen. Instead, price pushes up further, creating this, right? We have a fair value gap over here. So the market has incentive because it's going up long term to fill in this gap. We have liquidity over here, liquidity over here. So for me, the first opportunity will be buying below this area of liquidity on the zone. Assuming that the market will take out both of these liquidities. For as long as the market does not violate the lows, you have no reason to sell. So even if there's a change of sentiment-ish on the lower time frame, for as long as on the higher time frame trend hasn't changed, I have no incentive to sell. Profits taken. Like I said, took out both of these areas of liquidity and then dropped. There was a nested zone here. I don't like Nasdaq. I don't like how it looks. I don't like how it looks. This is me being honest. I don't like how it looks. But anyways, 2 wins, 3 trades taken, 1 loss, 2 wins. Have a low over here, which is an area of liquidity. The zone has been fully confirmed. Like I said, it's going up. I have no reason to sell. So let's see. If this was a pair that I was trading on a daily basis, I'm sure I wouldn't be making money. I'm sure I wouldn't be making money because I wouldn't trade it on a regular basis. Soaring to the top. What I want to see is a correction. I think this is the kind of instrument that you have to go with, or you have to trade with a bit of an edge, or else you're gonna constantly be losing because of you not knowing what to do on that particular day. So it took out liquidity. Mind you, there is no gap, there is no imbalance. So it's a low probability thing. Took out this area of liquidity. This zone nearly is a low probability zone because it has been retested 1-2 times. The third time is a loser, right? But we also have this zone over here that the market can still take out. Now, because the daily zone is in control on the lower time frames, what are we looking for? We're looking for a change of character. And we do see it right here. So first of all, we have a fair value gap over here and a zone. But this zone over here is a low probability zone. Why? It's located near liquidity. Where's another zone? Okay. The change of character for us is the market breaking this high over here. And then if we can break that high, confirmation or a conservative approach is to wait for breakout from this trend line. I'm not going to do that. All right, so this is a breaker. So we got a change of character. And then we had a fair value gap over here. This is trade number 4. And then impulse correction, right? Now, I'm thinking of taking this trade. And where will I put my stop loss? My take profit here. Why? Equal highs. So it's an area of liquidity. Going back to the 4-hour, the market has incentive to even go higher. So I'm going to enter here. It's a late entry. Place my stop loss here. If it's below 1.3, I have to adjust. It's too wide. The stop loss is too wide. So the fair value gap is between this and this. All right, going back to the 1 hour. Where is my fair value gap? It's here. So technically I can cheat this by placing my stop loss here. Yeah. All right. Wait a minute. Now that it went up, broke structures, I'm going to adjust my stop loss. It might go down because there's taken liquidity from here. So I don't want to be taken out of this trade. All right. So 4 trades, 2 winners, 2 losers. How did I see that it was going to reverse? First thing I saw was the market taking liquidity, and then the market breaking the slow. It's a signal there. Sentiment is shifting. Sentiment is changing. All right. So going to the daily, right, goes back to what I was saying about these things not being high probability. So I have 4 trades opened, 2 winners and 2 losers. I have an area of liquidity here before a zone, so I could take a trade from the zone. We also have another confirmed zone over here, but it's a low probability zone because price has been playing, or price has been spending too much time on the zone with these 2 candlesticks. So this is where I'm placing my on the 1 hour. We can also take trades if, okay, let's see. I was gonna say we can take trades if the market violates this high. which it did. Right. So this is a break again. All right, so can move this thing to break even. All right, so this is the setup, right? So take home from this session. I hate how Nasdaq looks. I have to learn about cycles. And number 3, I have to incorporate fundamentals. If that's the end of the session, I'll come back tomorrow. Peace.